Hey guys, so in this tutorial, I want to talk about the FICO scores that we use most in the US. There's so many different FICO scores. There's 11 plus, but typically in the US, we only use FICO Score 8 and FICO Score 2. So let me just read this document to you, and then I'll show you an example on a credit profile like I do with the other videos here. So in the US, two of the most commonly used credit scores are FICO Score 8 and FICO Score 2. FICO Score 8 is widely used by lenders for general credit decisions, including credit cards, personal loans. So with my clients, I always explain to them pretty much everything but a mortgage: personal loans, personal credit cards, business credit cards, personal credit cards, Ashley Home Furniture, a Verizon cell phone. You go to the dentist, Johnny needs dental work done, right? They're going to pull your FICO Score 8. You want to get a car, uh, you want to get uh, a solar, or you want to get a yacht or a boat. Pretty much everything but a mortgage, they use FICO Score 8 in the US. When you're going to apply for a mortgage, they use the FICO Score 2. FICO Score 2 is often used for home qualification. Both scores assess creditworthiness based on payment history, credit utilization, length of history, types of credit, and recent inquiries, but may weigh factors slightly differently depending on the scoring model. So let's talk about the ideal credit profile for optimal lending purposes. So to maximize borrowing opportunities and secure favorable loan terms, an ideal credit profile in America typically includes at least 5 open credit cards. The examples I've received from vendors are at least 2 primary trade lines, which means they're in your name, they're your cards, and then 3 authorized users would be like the bare minimum, is to have 5 credit cards, 2 of which are yours in good standing and that are in your name, and then 3 could be authorized users, somebody that, added you to a credit card. We talked about this in one of the earlier videos. Um, then the next would be to make sure 1 or 2 of those cards are at least 10 years old or older for the history aspect of it, right? Talking about the 5-step framework that we've discussed. An auto loan is the next best profile, right? So just having credit cards will allow you to get credit cards, but you're not going to have a lot of options for anything else being offered to you. Once you have an auto loan on the report, so credit cards and an auto loan, now you have what's called an installment loan, indicating that you have experience managing installment debt, which improves your credit mix. So credit cards are revolving lines of credit, which offer a minimum monthly payment option typically to pay those on a monthly basis, whereas an auto loan is an installment loan. So it's a fixed monthly payment every month. Then getting to the next level, the highest level, is adding a mortgage to your credit profile, which is a significant factor in demonstrating long-term financial responsibility and opens the doors to better credit opportunities. Having a balanced credit mix of revolving credit, credit cards, installment loans, auto, mortgage, etc., provides lenders with confidence in your ability to manage various types of debt, leading to higher credit limits, lower interest rates, and better or more favorable payment terms. So let's look at a profile here. I'm going to bring in another one of my happy clients here. We're going to look at his credit. So he's got 3 credit cards here, right? Ideally, he would want to have at least 2 more. He has added trade lines before. We've added authorized users for him whenever he's applying for something. Again, the idea is to understand what it needs to look like before you're applying for something. If you're not applying for anything, you don't need to pay your cards below 33%. You don't have to have 10-year history open on your credit report, right? You just have to make sure you make your minimum monthly payments on time. If you're not doing anything with your credit, totally fine. Just make your payments on time. Make sure you don't get any late payments. But looking for the optimal profile, here's a guy with 3 credit cards. He's got 3 auto loans and he has 2 mortgages. So this profile right here, not only does he have several auto loans, but he has 2 different mortgages. Banks are going to be willing to lend him plenty of money because he shows the ability to be able to pay back not only the credit cards on time in a timely manner, but also the installment loans with an auto loan, right? So the auto loan has a fixed monthly payment. In this case, it's $4,988, right? The individual account or responsibility means it's a primary trade line. That means it's his, belongs to him. It's a fixed monthly payment on an account type that's called installment auto or auto loan. On a mortgage, again, anytime you click on any of these on Experian, on the right side, it'll show you everything you need to know about the account. So this one is a mortgage, and it's got a fixed monthly payment of $15,679. It also belongs to him. It's a 30-year term. So this allows banks to see that you're able to make those types of payments and on time in, for various periods of time, which gives them the confidence to lend you money. If you only had 3 credit cards, you might get a $20,000 auto loan as your first time buying option with buying a car. But as we talked about in one of the previous videos, credit lends to like credit. So you've got to have a $100,000 vehicle paid off if you want to go buy a $100,000 vehicle, right? We've already talked about that. But credit cards, auto loans or installment loans, could be a personal loan as well, doesn't have to be an auto. And then mortgages. That is your ideal credit profile, guys. Credit cards, auto, and a mortgage on there. At the very least, you want to have 5 credit cards and at least 1 auto on there. And that's going to open up many doors for you in the way of being able to get approved for mortgages. Let's talk about the FICO 8 and FICO 2 scores real quick, and then we'll wrap this up. So this is called your FICO 8 score. It says it right there next to it. Other entities out there, like Credit Karma, for example, shows you the 3.0 Vantage score. Really no bank that I know of in all the lending and work that I've done in this industry, nobody pulls that report, the 3.0 Vantage score. So it's kind of pointless to have that score because it's wrong. It's off by about 40 points. Your best bet is to look at your FICO 8 score because, again, that's what we use most in America. That's not on Credit Karma or Credit Wise or any of these other apps out there. I'm not talking bad about anybody. I'm just letting you know what we use most is FICO Score 8, which you can find on Experian. If you get the paid membership, it shows you all 3 scores. So here's FICO Score 8 on TransUnion is the 811 for this gentleman. On Equifax, it is 792. On Experian, it is 785. Now, those are the FICO 8 scores. Again, what everybody else in the world looks at when you're applying for everything but a mortgage. When we want to find the mortgage score, you must have the membership active. So you have to have all 3 reports available. The upgrade needs to be done. Then you can hover over credit here and click on Credit Overview. And when you scroll down, you're going to look for the box that says Additional FICO Scores. Okay, here it is. Then we're going to click on the one that says Mortgages. And then when we click that open, we see that this is the mortgage lending score, FICO Score 2. FICO Score 2. That's what everyone looks at when you're buying a home. And post-COVID, as kind of an additional note, post-COVID, a lot of banks are looking at the FICO 2 score even when you're renting a property as well. So it just depends on the property management company. But yeah, so that is your tutorial on FICO scores most used in America, FICO Score 8 and FICO Score 2, and how to find them, and the ideal credit profile. right? So not everybody can have a mortgage on their credit, but if you can start out with at least some credit cards that have good payment history on them and at least an auto loan or two, then you're headed in the right direction. The next step would be to optimize your credit, optimize your finances, and, you know, talk with one of our team members to find out how to get approved for a mortgage. So there you have it, guys. There's your tutorial on FICO scores and the ideal credit profile.